Good morning, everybody. Happy Friday to you. This was a holiday shortened week. We only traded 4 days, but we've got a lot to talk about on Friday going home, Ben. So plenty to discuss here this morning. First of all, as we look back at the week, it was kind of a mixed week in the grain markets. The corn market's up about a penny, and where we closed in the modified, soybeans are down 22 cents. The wheat market's down 14 cents. So some pretty good losses in wheat and beans, but the corn market's hanging on. I think a lot of that's due to spread unwinding in terms of long bean, short corn. And obviously, the soybean market is paying more attention to China and its lack of demand, or abstained from buying U.S. beans than anything else. As you look at export sales this morning, they were relatively good in corn at 72.1 million bushels. That's net old and new in terms of we had net cancellations again in the old crop, and we'll get a rollover next week of all of those old sales to new crop. 29.2 net sales in soybeans, so middle of the road there, but poor sales in wheat, only down to 11.5 million bushels. And it shows you that world demand has shifted back to the Black Sea and Europe. So those are noteworthy as we look at those kind of things. We had an employment report this morning from the Labor Department. I'm sure Trump will take a shot at it. 22,000 jobs is what we added. So no doubt we're going to have an interest rate cut next week from the U.S. Central Bank. Whether it's a quarter or 0.5%, I think, is the key. And then as we look at some other issues or things, the GLAM, which measures NVDI, we just got readings for the last part of August, and they're still record high for both corn and beans. And I think that's important heading into the USDA crop report here next week, Friday, in terms of what USDA will do. We kind of see U.S. corn yield in a range of 185 to 187.5, soybean yield 52.7 to 53.3. So that would be the range we would be using. And Ben, I got to tell you, we're talking about this next break in the grain market being cash led, and boy, are we weak this morning in some of these cash markets. Soybeans, showing basis levels at Champaign, Illinois, just to pick out a location, 40 under. It's the weakest we can find in the last 5 years. Corn there is 28 to 30 under. And then if I go out to the Western Plains and start looking at sorghum, 90 to $1.10 under. So sorghum prices are just above $3 a bushel and very, very weak out there. So again, a lot of things to talk about, Ben. I think most important to me will be this battle about weather and China in terms of lack of demand in soybeans. But lead us off and give us your thoughts.
Yeah, sure thing. All very well said. Yield, every number is on the table. That is par for the course as you get into September and October WASDs every single year. So I think there's a lot of evidence, like you mentioned, to support a corn yield above 185, 186 even, soybean yield pretty close to or above 53 bushels an acre. And we acknowledge that it's not been perfect everywhere. It has been acutely dry in a lot of parts of the eastern Midwest and in Kentucky. But if we think nationally, and just looking at vegetation health, like you mentioned, the coverage of abnormal dryness or drought, it is much, much improved on last year. When we started the process of, eliminating soil moisture a year ago because of heat and dryness, things look a lot better kind of by most metrics, almost everywhere except for pockets of the eastern Midwest. So we are concerned about the national yield maybe not changing very much from USDA, and also that just results still in almost no matter what corn yield you want to put, total supplies this autumn of 17.6, 17.7 billion bushels. And so the question that we've got, like Dan and I talked about, is there another shoe to drop here because of cash markets? And I think that's something we've all got to pay attention to, because even the futures market is rooted in physical supply and demand of things. Wanted to break down some weather, though. We're kind of running on fumes here with respect to the time left to really change things. On the left, you've got 48-hour rainfall accumulation. So we've seen that frontal system move through the eastern Midwest, and we had some pretty decent rainfall in Kentucky. So it is what it is. Yeah, a lot of places would like more rain, but we did see pretty widespread amounts in a lot of places, 4/10, 6/10 of an inch. A lot of places, important places of Kentucky got, an inch or better. So, that's going to stabilize things. Probably, though, have to contend with dryness into the second half of September. If you see how wet it is off the East Coast, that water is supposed to be in the Midwest, but it's not because of a lot of atmospheric patterns. And so here we go. We're kind of counting down the days to harvest. And I think my perspective is, combine yields matter most. Kind of for us about creating goals and put together a compile actual. Although this morning we were, more so than the last couple of weeks, I think waiting on the U.S. export sales reports because we've had a change in cash market dynamics. I'd say one, corn demand through at least the very end of August is still very good. We sold, not excluding cancellations of old crop, but net 83 million bushels. New crop sales made last week. It's unchanged from the last week and up from 72 million the same week a year ago. You kind of see here graphically that there has been a push from the usual suspects, Mexico, some scattered countries in Southeast Asia and Colombia, buying lots of corn at cheap prices. I think next week's also will be important, the next week's report, because since about August 25th, we have seen an almost outright collapse in Argentine FOB premiums in Brazil. Ukraine's now reliably offering new crop corn, so we'll see if that does change the flow of sales of corn moving forward. And we have seen over time, FOB price relationships do explain completely who is the dominant exporter and who is not. So we got to be wary, pay very close attention to maybe a potential change in who's buying corn from where. I think South America does look to be destocking at the moment. And that's something that they weren't doing the last 2 months. And then soybean demand is still bad, and this all comes down to China just being totally absent. Still have sold 0 bushels to China through the very end of August. Total commitments, assuming that we're getting that non-Chinese demand, still pretty unremarkable. 336 million bushels, the lowest since 2019. And I think practically speaking, this is starting to matter because I do think it takes, before we get physical shipment data, we start selling beans next week. 6 weeks, 7 weeks until you see that, that those beans get to China. And so a year ago, we sold, 255 million bushels to China in September and October. And that number today, the default is 0. And if you extend this into November, you're talking about totals, 450 million bushels of demand potentially gone. So the soybean market rightly is starting to pay attention to this, and more so in the cash markets. I think you bring up a good point, Dan. Even the central Midwest is getting weak. And do you have this sort of cascading impact? We've been concerned in watching, upper Midwest, northern plains soybean basis, and it has, been totally reflective of the lack of any book to China in the Pacific Northwest. So a lot of these beans, of course, are grown to be put on trains, shipped to the West Coast, put on a boat, and shipped to China. You look at somewhere like Castleton, North Dakota, basis never terribly strong, but in the last 10 days has dropped from about 70 under Chicago to $1.50 under Chicago. This is all very unique to history. So the market is telling you that there is going to be piles of beans in a lot of places, especially those places that rely upon that Chinese demand that's still completely absent. So where do those beans go? Do we kind of oversupply the crush market in the northern part of the central U.S.? And I think that's, until China shows up, that is probably the case. So again, cash markets, I think, we still have to contend with over the next 2 or even 3 months. And wheat sales, I thought this was interesting. We're always the residual exporter of wheat, and I think that is starting to show up in the sales data just last week and probably for the next several weeks. So we sold, only 12 million bushels of wheat last week, compares to 21 million the previous week. And I think this is totally a function of all of a sudden Russia sorts out its sort of short-term supply disruption. They are now flooding the market with offers. New crop supply. I think Russia has to export record amounts from, let's call it, mid-September to the end of December or January, just to clear inventory. So there was not, in the end, a production issue. It was just maybe the absence of farmer selling, exporters not having supply availability for about a 30-day window, but that's changing very quick. So Russia probably has got to export 25 million tons of wheat in the next 4 months. It's going to be hard for anyone to get a foothold into the world market in terms of market share. So that has changed in the wheat market, and explains why the wheat market, more so than the others, have really struggled on recoveries. And also wheat and barley, feed markets, I think, too, have to contend with what's almost ideal weather in Australia. So another round of rainfall, maybe 1 or 2 inches, which is well above normal in both Western Australia and New South Wales and Victoria in the south. So what you're seeing here is September 1st to September 15th, % of normal rainfall. August looks very similar. So does July. I think that there's potential for further upward revisions in Australian grain production. So, a wheat crop, 34 to 35 million tons. They'll be a pretty sizable exporter indefinitely. The barley crop, too, may be the second or first best on a record, I think, if this weather pattern continues. So add that to feed wheat, milling wheat, large sorghum stocks. Yeah, just thinking about cash market competition for things is still where our heads are at. And so I know that we have had a pretty decent recovery, perhaps chart based in the corn market, but it is something to think about managing forward risk. Does this stick around if you've got cash markets just telling the market not to plant this next year? You're trying to get rid of it. Maybe that'll be pretty challenging. So that is where I think we are today.
Good rundown, Ben. As you see, I'm sitting in the Istanbul airport coming back from a conference. One of the big highlights here at the end of this conference was that the Russians were at least discussing the BRIC trading zone. In other words, Russia trading with Brazil and China and South Africa, and how this was going to be important going forward. Now, India is not a big market for egg imports today, but I got to tell you, Ben, I'm really worried about this BRIC trading zone and what it means to U.S. agriculture. It's something we have to watch, and just to have the Russians talking about it at a big conference like this was concerning for me. So I'll leave it at that, but that's why risk management, looking at the back end of the corn, wheat, and bean market is the place to be, selling those premiums and thinking forward even to the 2026 crop. It seems like a long ways off when we're only cutting beans nearby or soy, corn and upcoming, but it's something I think to manage risk we need to be looking at and really thinking about China not showing up for beans, at least as we get into the end of harvest or early next year. Any final comments from you, Ben?
I don't think so. I think we are kind of on the watch out for, real trend changes, weather disruptions. And that's kind of at this point down to South America in December. So that's a long ways off. We don't see any problems today. But if that doesn't happen, you fast forward 3 or 4 months, and we're just pretty adequately oversupplied for the foreseeable future. That's, I think, market risk long term.
Yeah, no, we could, like last year, lose 4 bushels an acre on corn and lose maybe 2 on beans, and we still end up with too much. I think that's the message of the market. So if there are rallies forthcoming, you need to be selling them. Everybody have a good Friday. Sorry to end on that kind of a down note, if you will, but Ben and I are really focused on trying to help farmers and the industry manage risk to the best of our ability. Have a good weekend, everybody. We'll be back on Monday. And Ben, have a good weekend in Chicago. Be well, everyone.
Likewise, sir.